Good afternoon, viewers. Today we will dive into the latest developments in both the traditional financial world and the cryptocurrency space, as significant legal and institutional changes shape the future of the markets. DWF Labs makes bold $25 million investment in World Liberty Financial, raising questions about crypto, politics, and transparency. In a significant development that blends the realms of decentralized finance and American politics, DWF Labs has announced a $25 million investment into World Liberty Financial, a blockchain-based financial venture with deep political ties. This move is being closely watched by both crypto insiders and political analysts, as it could reshape the narrative surrounding institutional crypto investments in the United States. WLFI, which was founded ahead of the 2020 United States presidential election, has garnered attention not only for its ambitions in the DeFi space but also for its association with notable political figures, most prominently members of the Trump family. The organization has previously stated its intent to collaborate with global crypto giant Binance in launching a new United States dollar-pegged stablecoin, dubbed $1. This proposed stablecoin could play a key role in WLFI's broader plan to revolutionize digital payments and decentralized finance in America and beyond. Andrei Grachev, managing partner at DWF Labs, expressed strong optimism about entering the United States crypto market. The United States is the world's largest single market for digital asset innovation. Our presence reflects our confidence in America's growth potential for institutional crypto adoption. The $1 stablecoin and upcoming global DeFi solutions align with our mission to enhance financial services, Grachev said in a public statement. In conjunction with this investment, DWF Labs is also establishing a physical presence in New York City, a move that industry observers say could significantly boost liquidity and market activity in the American crypto landscape. This isn't a casual step for the firm. With a diverse portfolio of more than 700 crypto projects globally, DWF Labs' deepening footprint in the United States underscores its broader strategy of global expansion and long-term influence in regulated markets. However, while the investment may suggest a promising path forward for DeFi in the United States, DWF Labs' history introduces a note of caution. The firm has previously faced serious allegations, including claims of market manipulation and wash trading practices that, if substantiated, could have legal and reputational consequences. Compounding these concerns are reports that Binance's internal investigation into DWF's trading behavior may have been obstructed due to financial incentives, further fueling skepticism. Additionally, DWF Labs was recently embroiled in a scandal involving the dismissal of a former partner, who faced troubling allegations that remain under public scrutiny. These controversies have left lingering doubts about the firm's internal governance and its commitment to ethical standards, particularly important in an industry still battling credibility issues. Tensions rise further due to growing unease within the crypto community over WLFI's structure and governance. Several observers have pointed out concerns about how revenue and token allocations may disproportionately benefit individuals closely tied to the Trump family. If accurate, such claims could raise significant ethical and regulatory red flags, particularly in the context of United States securities laws and the Securities and Exchange Commission's ongoing focus on politically affiliated crypto ventures. Some analysts believe that DWF's hefty investment in WLFI may not merely be a business decision, but potentially a strategic move to gain political leverage or even to buffer against legal risks in an increasingly complex regulatory environment. A recent disclosure has intensified these concerns, suggesting that this partnership could offer DWF Labs a measure of protection as regulatory agencies, including the Department of Justice, tighten their grip on digital asset firms. At the heart of the matter is a critical question. Is this a forward-thinking financial collaboration aimed at innovation, or a calculated alliance intended to navigate or even exploit the blurred lines between political power and financial influence? The stakes are high. As DWF Labs doubles down on its United States ambitions and prepares for additional DeFi initiatives, investors, regulators, and industry stakeholders alike will need to carefully monitor the unfolding situation. Key indicators such as token governance structures, transparency in financial reporting, and the handling of past allegations will be essential to determining the long-term viability and legitimacy of this venture. What remains clear is that DWF Labs' $25 million investment into WLFI marks more than just a financial milestone. It signals a deeper entanglement of crypto, politics, and institutional influence. As this partnership continues to evolve, the need for transparency, accountability, and independent oversight will become increasingly critical to preserving trust in the broader blockchain ecosystem. Coinbase report warns of potential crypto winter as altcoin market sheds 41% since December 2024 peak. A new report from Coinbase Research has sparked concern within the digital asset community, suggesting that the cryptocurrency market excluding Bitcoin may be entering another prolonged downturn, commonly referred to as a crypto winter. The findings point to a sharp 41% decline in market capitalization since December 2024, signaling what could be the onset of a challenging new phase for altcoins and investors alike. According to the report, the total market capitalization of cryptocurrencies, excluding Bitcoin, dropped from a peak of $1.6 trillion in December 2024 to just $950 billion by mid-April 2025. This represents a significant contraction in the broader digital asset space and places current valuations 17% below levels seen during the same period a year earlier. Even more telling is the fact that today's market cap lags behind the range observed between August 2021 and April 2022, a timeframe that previously saw a similarly steep decline, shortly before the last extended bear market took hold. But it's not just market caps that are faltering. The report also highlights a steep decline in venture capital activity across the crypto space. Coinbase notes that venture capital funding in the sector is still down between 50% and 60% compared to the investment surge experienced during the peak of the 2021-2022 bull market. This reduction in funding translates to fewer resources being funneled into crypto startups, innovation, and infrastructure, all of which are critical to the long-term growth and stability of the ecosystem. The report attributes this cautious investment climate largely to macroeconomic uncertainty. All of these structural pressures stem from the uncertainty of the broader macro environment, Coinbase analysts explain. Traditional risk assets, such as equities, have been under pressure from sustained fiscal tightening, volatile monetary policies, and increasingly protectionist tariff strategies. These factors have contributed to what Coinbase refers to as a paralysis in investment decision-making. Even with crypto's unique regulatory tailwinds, such as clearer legislative developments and increasing institutional interest, the broader market remains hesitant. This signals that idiosyncratic advantages in the crypto space aren't enough to overcome the drag of global financial instability, at least in the short term. In its assessment of current trends, the report also references the Coin 50 index, a benchmark that tracks the top 50 crypto assets by market capitalization. Coinbase notes that this index has remained firmly in bear market territory since the end of February 2025. The performance of the Coin 50 aligns with the broader 41% drop in non-Bitcoin crypto assets, reinforcing concerns about prolonged market weakness. The data suggests that the crypto ecosystem is experiencing more than just a temporary dip. Rather, the indicators point to a deeper cyclical downturn that may take time to resolve. Coinbase analysts argue that such interconnected pressures, from dwindling capital flows to geopolitical and macroeconomic headwinds, justify a continued cautionary stance from investors and developers alike. A notable aspect of the downturn is its asymmetric impact across the crypto spectrum. While Bitcoin has retained a degree of relative stability and institutional interest, altcoins have borne the brunt of the losses. This is largely due to their higher volatility, lower liquidity, and increased exposure to speculative investment behavior. The risk premium for holding altcoins, especially those lower down the market cap ladder, remains elevated, making them particularly vulnerable in turbulent conditions. In addition to market dynamics, psychological sentiment also plays a crucial role. The report emphasizes that investor confidence has been significantly shaken. This lack of confidence often becomes self-reinforcing, creating a feedback loop in which falling prices deter investment, and lack of investment further drives down prices. Social media chatter and community engagement, which once fueled speculative bubbles, now reflect a tone of caution, frustration, and hesitation. For everyday investors, developers, and crypto enthusiasts looking to make sense of the road ahead, Coinbase's message is clear: proceed with heightened caution. The current landscape demands a careful, measured approach to both investment and development in the digital asset space. While periods of contraction often lay the groundwork for future innovation and opportunity, the immediate future remains uncertain and fraught with potential pitfalls. Ultimately, the Coinbase report serves as a timely reminder that the cryptocurrency market is still subject to the same cyclical and structural forces as traditional financial systems. And in times of broader economic strain, digital assets, especially those outside of Bitcoin, may not be immune to systemic volatility. As market participants watch for signs of stabilization or recovery, it will be critical to monitor funding activity, regulatory developments, and macroeconomic indicators that could signal either a rebound or a deeper descent into crypto winter. Coinbase concludes that while innovation continues to simmer beneath the surface, the frosty winds of caution are likely to dominate market sentiment for the foreseeable future.